Hi guys, welcome back to ASX Market Watch. Hey, thank you so much for joining me today. We've got a really great episode on ASX Market Watch this week, especially because what we're looking at is solid tested signals. All of the really great stuff that you want to look at when you're looking at the charts on the world charts or on individual charts for a stock as well. So great stuff to know, guys. Great stuff to have a handle on. And as you know, we look at the world, so we've got Australia down under on the All Ordinaries. We've got the Dow Jones in America, we've got the FTSE in Europe, and we've got the Shanghai Composite in China, or the Hang Seng as well. So I'm looking at Asia, because Asia is quite a big region at the moment, and quite a point of topic as well. Guys, really simple stuff. And again, what we'll do is we'll start with down under, because we believe, and we look at the index, because we believe that 3 out of 4 stocks may follow the overall market. And if we know which way the overall market is heading, happy days, we might know which way the overall stock, or 3 out of 4 stocks might be heading as well. So guys, so ridiculously simple. Let's jump into the good stuff right now. What we've got on the All Ordinaries is, if we were looking at it from an Elliott wave point of view, really quickly, these are the predictions that we've been doing over the last couple of months. Now, as I usually will tell you guys, I don't like doing predictions, but you know, it's a bit of fun. Most people who do them traditionally don't get them right more than 50% of the time anyway, so stick to your solid tested rules. I've been extremely lucky, and I've been getting it right quite a bit lately over the last 8 months. What we've got is 1, 2, 3, 4, 5 waves up, guys, and so yes, it has met our target. Our target was anything above 4,900. A beautiful run. It went straight into that level. Now what we've got is this little zigzag pattern down, so that would be our solid signal for a downtrend, for a short-term downtrend on a short-term basis. But what we're looking at, guys, as well, if we just look at this on an enlarged basis, there we go. So this is the very bottom of the bull market. This is our longer term uptrend. It's a simple line on a chart, but what you will find is that price on a chart finds support at the uptrend in the future. So what that means for us is that we might find short-term down movements inside a longer-term up movement. There we go. There's that up move there. So that's really what we're potentially looking for at the moment. And again, you know, this will and it can provide opportunities to buy in the future. If, and we haven't yet, if we do get our short-term down movements or a short-term downtrend signals, then we can look at these levels of support in the future, so around 4,700, 4,800 on the All Ordinaries. We can look to these levels in the future as potential buying opportunities if we get entry signals in our charts as well. So how simple is that? And that's the tested stuff. That's the real solid entry signals and exit signals. One thing that you need to know about this time of the year, guys, is February. February is traditionally a weak month. So yes, that has the potential to show weakness in the markets. You know, if you look at it on a yearly cyclical basis, John Murphy looks at it in his book, Technical Analysis of Stock Market Trends, or something similar to that. Fantastic book by John Murphy. Highly recommend it. Yearly cycles, I think, as we were saying last year, November to January is traditionally the strongest time of the year, and as you can see, we've had a decent uptrend around that period. February is traditionally one of the weakest parts, along with August and September of the year. So again, that's just something that you can watch out for in the meantime with your solid back-tested signals as well. Very simple. Quickly is the Dow Jones. What we've got, again, as you can see, you know, everybody got scared a little bit on Friday. There was probably a 1.5 move down, and if I just enlarge that, again, it's a single bar. It doesn't mean anything from a chartist point of view. For me personally, it may for other people. What I would prefer, again, as you can see, uptrend line, longer term uptrend line. Also, we've got previous high. So the support you will find at a previous high is something that you can look at as well. That is something that will and can occur. But more importantly, guys, what we're looking for, again, is a tested exit signal to confirm the downtrend. So this single bar, it doesn't interest me whatsoever on the Dow Jones. And again, the American markets, I mean, from an economic standpoint, starting to grow again. Which is decent, but again, I prefer to look at the charts, and what we're looking for is a zigzag down. We've, as I said, heaps and heaps of support at these trend lines, and this is the longer term trend line from the very bottom of the bull market. So that's our support at 11,000 on a longer term basis. And again, we might find the short term down moves inside a longer term uptrend. So ridiculously simple stuff on the Dow Jones. Really quickly, the FTSE, and the FTSE is most interesting because we call this single bar right here. This is what I prefer to term as a doji. It starts in the middle somewhere, or usually down the bottom, goes up during the day, and then closes well on its lows, which signals that sellers came back into the market at that level. Now, the reason I pointed that single bar out is because at the time we called it as an extremely short downtrend, and as you can see, the market has not been able to close above that resistance, that blue line there. It has not been able to close above that resistance since. Now, we haven't had the confirmed exit signal. No, not yet. That would be a close below 5,869. But again, what do we got? A whole bunch of uptrend support. So again, guys, we might have these short-term down fluctuations inside the longer-term uptrends. Exactly right. You guys have got this. You guys have nailed it on the head. So simple stuff on the FTSE. Short term, I mean really, really short term, yes, downtrend. Have we confirmed a short term exit signal yet? No, not yet. And have we got a whole bunch of long term uptrend support? Heck yes, we do. So that's the FTSE from a chartist point of view. Really simple. The Shanghai Composite still in a confirmed downtrend, guys. And again, we called this a couple of weeks ago. And then China, the economic news came out after that, sort of confirming what we've said. According to the charts, what we're looking at is a downtrend line that will provide resistance in the future. There's a longer term downtrend line providing resistance at about 3,100, I think, as well. Actually, I might just quickly draw that in just so that you guys have got that. Here we go. There we go. So that would be, yeah, at about 3,000, about the 3,000 level. If the market does close above 2,900, then that would be a more of a bullish sign on the Shanghai Composite in China. But until then, guys, it remains in that downtrend move. A lot of support, guys, at 2,600. As you can see, if I just enlarge this a little bit for you, I'll just see if I can do that. And we're moving back in history. There's that blue line, as you can see, coming up. Look at the support. 1, 2, 3, 4. 4 times it's bounced off that support. And again, previous to that, earlier in the year as well, really, sort of flirting with that level as well. This is a level where investors in China are potentially buying up at these prices, and that's what's supporting the market. It's not rocket science. It just means that there's more buyers than there are sellers at that level, and we're coming up to that level again. So again, still in a short-term downtrend in China, and that will affect Australian markets and other markets around the world, because China's a bit of a force to be reckoned with at the moment. And again, a lot of support at 2,600 on Shanghai. So guys, that is your Market Watch Weekly for this week. And what did I do? We went through a whole bunch of really solid tested rules, stuff that really does work. And no rule will work 100% of the time, but this stuff has worked, and it's worked more than it's not worked for me, which is an excellent sign, and it's an edge that you need in the markets. So that keeps me safe most of the time. What we've got is next week, guys, we'll have a lot more stuff, a lot more tools, checking out the markets, looking at where they're heading, looking at the potential targets as well. Cannot wait to share it with you. Until then, guys, happy trending. Bye for now.